У меня. У меня 1.8.
Okay, I will do my best to gather all 23 startups for today's meeting. So far, we have two startups. I'm so sad. In any case, during the workshop session.
Sophia, actually, you shouldn't be sad for that. You know why? It's like a funnel. You know, every time it's reading, they are the who doesn't give up.
Yeah, maybe you're right, but you know, like my mission is to give for Azerbaijan startups the best experience from the leader of from European region, and my mission is to gather as much or more possible startups to this meeting. You know,
we as a Smile Pay, we got all these things. Thank you so much for that. We got a lot of value from you, from your team, from this bootcamp. It's great.
Okay.
Maybe the others are still on the lunch, so hopefully others will also join.
Maybe. By the way, in Azerbaijan right now it's 3 p.m., right?
Yep.
So it's not like lunch time.
Oh,
yes,
I see.
it's not lunch.
We just after lunch.
Ah,
because you have because of the time difference, you have +2, right? Comparing to CET.
Yeah.
Yep.
Okay, I think we can start. Just can I ask you guys to yourself for introduction?
So
during the session, feel free to ask any questions. Of course, it depends of Janos about his rule of this meeting. In any case, I'm just want to say that welcome to Bootcamp Day 4, Budapest chapter, the last but not least day. Sorry, not least workshop. Who is? Okay, it's Janos.
Can you see now?
Yeah, I can see. Just let me add a few words about introduction, and then I will switch microphone directly to you.
Thank you.
So welcome to Budapest Day 4, the last but not least workshop session of this chapter. Today we expect a very important person on our stage, Janos Fabricius Ferhe, if I'm pronouncing correct, sorry.
That was pretty nice, thank you.
Yeah. And Janos is senior venture capital expert with 15 more years experience in venture capital investments, participated in more than 70 investment transactions in Hungary and abroad. Also, Janos is a partner at OXO Ventures. OXO Ventures, according to my list, is the leading of venture fund in Hungary. And Janos worked several years in structured bank financing at the KBC Group, member of P&H Bank in Hungary. Janos holds a master degree. Sorry, I need to admit some person. A master degree in economics from Budapest University and executive MBA from the CEU Business School. Janos is member of the board at the Hungarian Private Equity and Venture Capital Association. As you already know, that today topics will be related to early stage VC fundraising and how to walk the rope.
How to walk the rope. Thank you very much. Thank you.
Attendance here. Hope we will gather all 23 startups today. It's my main mission. So we can start.
Thank you very much. Well, it's in a family. Because not much startups I can see, but great to have here. And then you have a better chance to ask questions, and we can have a more of the discussion instead of just a simple lecture type of session. So just a little update. I already left Oxo Ventures and I'm on my own advisory boutique doing M&A and investment transactions in the region. I do private equity acquisitions on the buyer side. Most of the case, I have Hungarian investors to invest into Central Eastern European startups and later stage companies, and also advising more and more a US-based VC fund looking for great technology startups in the region. Most of the cases in the Central Eastern Europe, but your country is not excluded at all. So I just received a list of these 20, I think it's 23 startups, and I didn't have time to look into their pitches, but I'm going to do that in case they are in IoT industry, automation, enterprise software, B2B, or cryptocurrencies. I'm very happy to look into those companies even in more details, especially if they are interested in the US market. So this is what I'm doing as of today, and have a bit of experience with VC investments in the last over 15 years, mostly in Hungary and at some extent Central Eastern Europe. I'm doing a lot of work with Serbia as of today, so it is outside of the EU, and we are looking into many early stage and later stage transactions. So that's as a little intro. Do you see my presentation? I don't see it for myself. You see it for some reasons. I don't see it. Okay, so now is it better now? For some reasons I don't see. Where should I see the?
I don't know, but I still can see the presentation.
Okay,
nothing has been changed. So maybe just try to click the next slide, and I will confirm that everything is okay.
So
yeah,
you should see the schedule.
Yeah, I see.
It's bad that I don't see. I think I need to change the view probably.
Yeah, it's quite complicated from Teams to share presentation and alongside.
Okay, change the view, but I still don't see it. But I see a couple of participants. Do I see it right?
So far, okay. 13.
Anyway, so you still see my screen?
Yeah, I see schedule.
Okay, very good. So the schedule. So we did a little introduction. Then I'm talking about, I'm not a lecturer. I'm more like a practitioner. So I will share my experience, and I try to give you some insights how a VC fund thinks, and what a VC fund is looking for when looking into a startup. We can have a little break, and then we have the Q&A. I have a little Kahoot play, but maybe we will see how many participants we will have, and then maybe I send you the questions. It's more for fun. And I also prepared some homework assignment for you. I hope you're happy with that. So we have like 2 startups still, right? Simple Pay, sorry, and also ePoint, right?
No.
Smile Pay. Sir, Yanis, it's Smile Pay. You're paying
it's
with your smile.
It's Smile Pay. Okay, yeah. Right. Sorry.
No, worry.
Just wanted to ask whether you already raised the money. So which stage you are at?
Actually, we are in the seed stage. We are working with local. Give me a second. I'm so sorry for that.
No problem.
Okay. Give me a second. I have sent you a video. We are in the seed stage. We are working the local bank, the great bank in Azerbaijan right now, and they are invested us up to $200,000. So we didn't get all of this money yet, but we are getting the part of it every time. Each time we are successfully launch our product in other grocery stores or something else. So that's why I think it's but we need the other investment, because it's locally we are looking for global, you know, because this startup is right now is in Azerbaijan, but we are looking for the partners in globally. So that's it.
Okay. Yep. And is just a quick question, is it a VC investor or more like a strategic investor? Like VC terms or more like a special terms?
Actually, they have some share of the startup on them, so I don't know how to call them. Is it strategic or VC? I don't know. You are not the best of this, so that's why I'm here to ask what's the difference between that. Okay. But I know that they have some share of this startup, so that's why they are investing, because they took the share.
Okay, thank you. And E-Point, do I say it right?
Yeah, exactly. E-Point.
So yeah, what stage you are at?
We're at stage round A. So basically, our startup is financed through our own funds yet, but we're in stage A. So we're looking for investment to scale globally, because the local market is, we've tested on the local market, is working perfectly. And now we are ready to go global, and that's why we're raising 250K, sorry, at least for the first.
So it's more like a seed stage. Okay, thank you very much. I just, you know, maybe I'm able to better address, let's say, this stage in my presentation. Thank you for that. And we can discuss a couple of things later also. Okay, so that was the schedule. Can you see the next slide? Venture capital. Can you see the next slide?
Yes.
With the prehistoric guys?
Yes.
I'm so sorry, but I cannot see anything. Is this a problem on me, or?
I don't know, but
we can see it actually.
I also have some problem. I can see presentation. But can you hear me right now?
Yes.
Yes, we can.
Okay, so both of you can see the presentation or not yet?
Yeah, I do.
Yes, I can see.
Okay. So the venture capital, basically, what you know, I'm going to talk about like regular venture. Most of the cases, regular venture capital investments done by venture capital funds. Most of the cases, I will explain a bit what I mean by that. And it is always an external financing, so it is not by the inventors, not by the founders. It is an external party providing cash into your company to continue your development, and they as an external party, most of the cases in a minority position, they expect rights and ownership on the return. Still, in general, again, I will talk about Central Eastern European or Central European standards. It is different in the States. It is a bit different in Western Europe. You know, I'm sharing my own experience, and I'm most experienced in Central European investments and transactions and venture capital funds. There are special funds doing things differently, but I think maybe as of today, the most important to you is to understand the basics, and you will find very special funds and very special investors around the globe with like special approaches and special terms. But let's talk about the basics. So these venture capital funds, venture capital investors, most of the cases in a structured fund invest into startups for a high financial return. So we're not talking about strategic investors, like, for example, a mobile operator is interested in technologies which would support their activity, but they are not their prime interest. The most important interest is not for financial return, but their interest is more for getting the technology, the novelties which they incorporate into their services. What I call like venture capital, and not corporate venture capital, but just venture capital, is a financial investor for financial return, and they seek an exit from the company in a 3-5 by book. But in most of the cases in Central Europe, it is more than 3-5 years, usually, let's say 3 to 7 years holding period in the startup. So I go to the next slide. If you have any questions in the meantime, if it's a quick one, I'm trying to answer that. If not, we can talk about it at the end. Okay, so can you see the special asset class? I'm asking because I don't see my presentation. Okay, good.
I can see.
So it is a special asset class. I call it a special asset class because it is a, let's start with that. It's a kind of illiquid asset. So once you have an investor invested into your company, it is most of the cases according to a special agreed contract, which is not a general one, but it contains the terms you agreed with the investor together. So they are in a special situation based on it's a tailor-made contract you're going to sign with them. It means it has special conditions at each and every startups. There are many similarities, of course, but it is like a one-time agreement between the investor and yourself. So, and it's not very easy for the VC fund to exit from your company. If everything goes well, of course, the next round the investor would come and take a bigger role, and even at a certain stage buy your earlier investor out. But it's still it is not a liquid asset that can be sold on a market, and on top of that, you won't be happy that the investor sells this 25-33% of your company on the market and sell it to someone you don't know. It is I say they are like specialized investors at different stages, at different investment rounds. So even if 70% of the approach is the same along the food chain or the value chain, early stage investors have some special terms. Later stage or Series A, let's call it Series A investors, they have their own special terms, and the later stage investors also. So based on your stage of development, the best is to look for those investors who shoot for the same development stage. So it is very difficult to convince an investor who is usually investing for a ticket size like 1 million to convince them to invest to 250K to ePoint, in case this is not their sweet point. We call it sweet point, which is the development stage and ticket size the investor is looking for. And I will talk about a bit on the fund side how it works.
I'm very sorry to interrupt. It's just to check. I see only the slide with ancient people, the first one. Are you still on it, or? Okay, I thought.
There we go.
Oh yeah, no, thank you.
Sorry. So please let me know, because I don't have a feedback on that.
Just if you when you change the slide, could you just say something if it's
Okay.
not changed by us. Thank
All
you.
right. So now we are on slide 4. And now you see it's slide 4, right?
Special asset
Special
class.
asset
Exactly.
class.
Okay, good. So this is what I was talking about: illiquid asset class, specialized investors at different stages and different investment rounds, and also look at as a window opportunity. You need to understand that the fund, any fund is, I will talk about it later, but basically there is a certain period of time when you have the best chance to get investment from a fund. So there's always a window opportunity for the investment into your startup, and there's always a kind of window opportunity for the exit, partially because of the same reasons. So all I'm saying here, it is a quite special asset class, and you also need to understand that this VC is a special breed with their own logic and investment the way how they do the investments. Okay, I'm going to the next slide. Oh, something is not working here.
Janos, maybe it will be better if I share your presentation from my side and you just...
Yes, please,
Yeah?
please do so.
Okay.
Now we should be on the 6th page, but maybe I lost the 5th. I did something. Which I
Yeah.
shouldn't do.
Now, just a second, I need to upload it.
You should see the traction development changes on mine, but if you share, that's even better.
Yeah, I tried to download it to my computer. It will take some time.
In the meantime, do you see the number 5?
I see number 4.
Number 4, okay. Now it should be number 5.
Yeah.
Okay.
Mm-hmm.
So this is like just a general chart. It's not done by me, but it shows you how the traction, how the development stages are according to time. You see the hockey stick shape, which is quite well known in this industry. You're basically somewhere at the ideation, bootstrapping, very early stage financing, when you have the idea, when you find a problem which you are identifying and try to solve that problem with a service or a product. This is like the first step. It is more like a continuous development, of course, but you know, you're going to talk and discuss things with people from the financial industry, which means, you know, they like this, you know, steps, so they can quite well identify, and then they can go to the next level, which they try to identify, and then they move to the next level, which they try to identify. Otherwise, it's more like from the startup side, it is more like a continuous development, but the investors like to, you know, grab the momentum and grab this stage, identify it for themselves, because it's easier for them to understand. Okay, I hope you still see the 5th page.
Yeah.
Okay, so the next, let's say, next stage is when you make this problem solution fit. When after identifying the problem, you try to come up with a solution. It is maybe we call it beta testing, we can call it prototype, you can call it a proof of concept, something you can show to the angel investors, seed funds, early stage financing companies, showing that something is working. The next level, when you're working on the product and making your MVP or your first product, and you're trying to really find how the product fit to the market, and then you get back the first feedbacks from the investors. So starting with a minimum viable product, you get to the first final products, and there will be many versions. And then the next round, when you already have at least one product or service working on the market, having received feedback from the market, they start paying for it. Then you try to finalize your business model. How you try one way, you try the second way, maybe you different kind of business models you apply finally until you finally find the best one, which brings you the best results in growth and revenues. So that's just the very general things. I went to the next slide. In Central Eastern Europe, I see these numbers. Again, this round, investment rounds based on the development phase, and the ticket sizes. What I see for the angel, I'm not sure how the business angel markets or business angel community exists in your country, Azerbaijan. Maybe you find it's easy to find some angel investors. Sometimes it's very difficult. Most of the cases, what I see in the Central European or Central Eastern European countries, that the market is not. There is a path how the startup gets the money, investments, and the market usually builds up from the other way around. It starts with the big funds, and then smaller funds start on the market, and finally there is a group of angel investors invest along the VCs. So it is interesting how the market usually evolves in these countries. Just one second, sorry. This is the number. This is the numbers which I usually see in the Central Eastern European countries. Angels up to like 100K, seed round, usually VC funds. Somewhere around a couple of hundreds K euros or dollars. It's let's say the same range and this is true for Central Europe. For Western Europe, you see a lot bigger numbers. For the States, you see again bigger numbers. We call in Europe or Central Eastern Europe a Series A round somewhere around €500,000 up to like 2-3 million euros, but this is just the seed round in the States. And we call Series B, Series C above this level when there is the money is really for scaling, expansion, and going abroad. Above like 2-3 million euros, which is usually just a Series A in the United States. So there are different size for the market, so different size for the investment rounds. Okay, I go to the next one. So this is like, I would like to talk about, maybe you don't hear that much, and it's maybe not so easy to get information how a fund really works. And I call it, this is not my chart, but what I'm explaining here is something very similar. Basically, this is on the fund side. Again, standard VC, not a corporate venture, and not a strategic kind of investor. It is like a formalized fund, which means that there is this special vehicle in many countries. We call it fund. Basically, it's a big pile of money, which is in a formalized structure. And usually this money is available for the management, managing the company, the people you're going to talk to, the fund managers. They run the fund. They have the mandate to run the fund for usually like a 7-10 years period. If it's, again, financial investors investing into the fund, and most of the cases, these are closed-end funds. So there is a beginning, there is an end. Maybe you heard about LPs and GPs. The GP, the general partner, is basically the management running the fund, and the LP, the limited partner, is the investor to the fund. It's usually, it can be, you know, it can be private, it can be a private individual, it can be a bank, it can be a you know, whatever institution, it can be a fund of fund, but basically they are putting a big pile of money, 60 million euro together, or US dollars together, and this money can be used for investments according to like a quite nicely and detailed contract between the LPs and the GP. The GP is usually a company, and the GP is usually owned by the fund managers. The fund managers have skin in the game. Usually there's an expectation to put, as the fund manager, to put somewhere around, depending on the size of the fund, 1 to 5% equity participation on their side. So the fund manager puts money into the fund up to this 1 to 5%, and they manage the fund manage the fund and makes, it's like in most of the cases they're like independent management. They make their own decisions. So the LPs don't run the fund. They do not participate in the investment decisions. They provided the money, and they have a financial return expectation. We usually call it a hurdle rate, which is, you know, it can be different as of today, but in better times it were around like 8-10%, depending again on the type of the fund. If it's like an early stage fund, then there's higher revenue or revenue expectation. If it's the later stage fund, usually there's lower revenue expectations. So these are the expectations of the LPs. And the GPs, the GP, the general partner, so the management team, has the responsibility to run the fund, to make the investments, and also to bring that expected rate for the LPs. So the management team, they have a long-term contract for managing the fund. They have an equity participation in the fund, and for the long-term motivation, they have like a carried interest structure, which means that even if they provided only like 1-5% of the equity of the fund, in case they bring the hurdle, the level of the expected return, there is a split if the return of the fund at the closure of the fund, so not at the individual level of startups, but at the closure of the fund after, like, let's say 7 years, they pay, you know, the money back to the investors with the return, and above the hurdle level they get like 20% of that return, which can be a pretty high number. So this is the long-term motivation program usually for the management. The reason what I'm explaining it to you because you will have a better understanding how the funds work and how the management is motivated. And you know, this is at the end they are motivated to make transactions and make a nice return. In case they reach a certain level of the return, then they're gonna be also quite well financially motivated. The fund life cycle, in short, they start with a fundraising, which is a very long process. So the management team puts together a strategy. They say it's a great opportunity in Azerbaijan. It's good to it's great to do a specialized fund, especially concentrating on that region. And then they start to collect money. In case they were able to collect the money, they start the fund. There is an investment period, let's say 5-7 years. They are able to make the investments, and then they manage the portfolio. And after like 5 years, they already start to seek for exit from the portfolio companies, from the startups. There's a divestment period, and in the meantime, they start again a new fundraising to put again a big pile of cash together and make investments continuously. You may remember I said it is kind of window opportunities. So it is not enough that you find a fund which you know on their website, or you just know that they're looking for, you know, fintech investments. You also need to be there at a good point of time. And you don't necessarily know what stage the fund is at, but basically you need the fund being active in their investment period, when they just started their activity, when they are hungry for new investments, which is usually this investment period, this first 5-7 years, and later that they will say we save the money for follow-ons on the existing portfolio, because, you know, there are some problems at some startups, and we would like to provide additional money because they can get over the hurdles, and then that's why they're saying we're not investing into new startups. Sometimes they just don't say, they just say, if you send the pitch deck, thank you very much, we are not interested. In many cases, they don't explain, and the reasons can be that they don't have enough money. Usually they don't say. Okay, so portfolio approach, again, it is also helps you to understand the other side, based on the size of the fund and based on the deal size. They will have a number of transactions. They will have a portfolio of 20 startups or 10 startups. And they also, you know, it is important for a fund to, you know, try to make a plan how many investments they make, and how they are going to bring the expected return back to the LPs, and how they are able to make money on that. So that's the fundamentals, what is on the other side. Okay, go to the next slide. The transaction process. Maybe it's not a new thing to you, how it works with a fund. Maybe you have some experience, maybe not yet, but this is what you are going to see. And it can be different, of course, and it is different from fund to fund, but it's like a generalist approach. So there is this intro phase. You send your one-pager, or you meet them somewhere in a startup competition, and you give a verbal pitch. So they can do a first filtering if the startup is something they're interested, if it's in the domain they're interested, if it's fintech or if it's medtech. Usually many fund is specialized in couple areas where they have the contacts, where they have the knowledge, where they have the understanding of the market. So not all funds do, you know, all the domains or all the industries. So they can do the first filtering, and then if your startup, your product fits to their interest, then there's usually a pitch. What I see more and more is online pitches, which is very interesting. You couldn't, you know, there was one thumb rule in the past. You always need to meet the team in person. And now it changed, totally changed. Now everybody's fine with online pitches and online meetings, and this is how it works now. And then they do a first evaluation, usually just a go no go decision. They don't go into big details. They just, you know, they just meet with the team. They just meet with the concept, so they can make their own decision whether, you know, they like it, they like the team, they liked how it was presented or not. So sometimes you just got a quick no, or you get a green light, and you can do more. You enter into, I call it like a preparation phase, when you might require an NDA from them, and then you provide information to them, and they can do their own internal analysis on the subject. If it goes well, then you get into a kind of term sheet discussion phase, where you receive kind of let's call it an empty term sheet. Again, it really depending on the style and the way how the fund does. Usually we provide, you know, a term sheet which has some specialties already tailor-made to the startup, but it's still kind of general. You read it, and there is a discussion over the term sheet. If both sides agrees, if parties agrees on the main terms of the term sheet, then you sign it, and then a transaction phase starts. Most of the cases, the term sheets are indicative, so it is not binding for the parties, except 3 points. I will talk about it later, but basically this is like exclusivity for 36 days until the due diligence is done. The non-disclosure, so none of the parties is going to market that, you know, I have Smile Pay. Did I say right? Smile Pay. We are already in discussion with these US-based VCs, so we are very good. So you're usually not able to put it on your website. It is something you should not disclose. And the third binding point is if there are costs, then you borne your own costs. Otherwise, these term sheets are just indicative. And then the due diligence starts. If everything goes well, most of the cases, I don't want to go into big details, there can be like a second term sheet, or there can be a binding term sheet, but the documents are going to be prepared, which is a very long and can be a very frustrating process. And when you are able to discuss everything in details in the documents, then you get into the signing and funding, and then a cooperation phase starts. As you can see, the funnel, you know, a lot of startup pitches hit the email box or the website of the fund. They do a pre-selection, then they go through the process, and finally they have a lot smaller portfolio. Usually the number I see, like out of 100 introductions, maybe it's not pitches, just intros, usually 2-3 is funded, but it can be a very different number as well. I went to the next slide. Do you see what is the right time and right amount?
Yes, I can.
Good.
Yes.
So, well, these are the big questions. Of course, it is, and there are pros and cons. And the startup is in continuous fundraising, most of the cases. And as I said, you're going to talk to financial people. So financial people like definitions, they like brackets, they like, you know, stages they can stick to, and something need to be put into the contract. So usually they like to put milestones, which means there is a milestone to reach a certain stage of development. There is a milestone to reach a certain number of customers. So when you can show a milestone, it's a good time. So when you reached a certain development level, which you can show, maybe it's a proof of concept, maybe it's an MVP, maybe it's your first couple of paying customers, recurring revenues, then it is a good time to go to a startup. Maybe you start the search before, but you plan in a way that when you are you know, in discussion with the investor, you have something in your hands you can show. How much? It's always a big question. There are some supporting elements or supporting things which I can mention. So of course you have a business plan. The money you look for should be supported by your business plan, most of the cases. Also, you know, there's a balance. You know, how much money you need and what is the sweet point of that particular investor. And that's why it's so it's, of course, it's not something you know by heart. You need to, you know, do your homework with the investor and look into available information. How much money maybe they say out loudly, they put it on their website. Sometimes it's not that clear. It's always good to do your homework and try to find information about it. Of course, a very simple rule: you don't ask too much. It's not you only ask what is needed, because then hopefully your startup will worth more later. So why undervalue your startup? And you also look into your cash flow minimum. Of course, this is a number which also drives the numbers. Okay, maybe just a little bit of company valuation, but it just basics. I don't want to into the computation. It is just, you know, it helps your way of thinking. So it's not not only the question how much is good to raise. It also a good question or difficult question how much percentage you need to give up. But I went through many discussions, and percentage in at least in my experience is a very big issue. If it's 20%, 25%, 33%, because you're thinking about the $1 billion which you give up unnecessarily, but usually it's not. So there's a big debate in many cases with the valuation, with how much percentage you give up. But at the end of the discussion, you understand the percentage. After the term sheet discussions, you understand that the percentage only just one number, just one element, and there are so many other things you need to agree on. So don't be someone only concentrating on the percentage, because it counts a lot, but it's not everything. So some basic for the company valuation. Actually, I will say it at here, and I will jump back. So it is not really the company valuation. It's very difficult to evaluate precisely the value of your startup, especially at early stage. It is more like some value we give to the transaction. This is, I like to say that. There are some elements for the valuation. For example, your business plan, the fundamentals, how you're going to grow, how much revenue, how much EBITDA you are going to bring, or if you are at an early stage, what is the pace of acquiring customers. So what is your customer base, how you're going to increase it. These are the fundamentals. Based on the previous slides, you start to understand that there are some return expectations on the investors. So the management team has a task to make investments and make money on that. So they also do the computation, based on their return expectations, which is maybe not in line with your projections. Also, another element, how much money you're raising compared to the current stage of the startup. Sometimes you just want to ask too much, and sometimes you're not at that certain level. So the investor is not going to evaluate your company high enough. So they are going to ask too big percentage, and you're not going to make an agreement on that. So it is difficult because there are so many uncertainty at the very early stage of the startups, very early life of the startups. Maybe I'm a bit running out of time, but we can continue at the second part, and we can still have questions. Again, some basic numbers or thumb rules. Angels usually, as I see, ask for like something like at least 5%, because 1, 2, 3% is something. Even if the value could be really high, it is, you don't really see yourself as an angel, as an really part of the game if you have like 0.5%. So somewhere between like 5-25% could be. Again, it could be a healthy stake. At the same time, there are so many different factors which has an effect on that. And seed and venture rounds usually around this 15, 35 up to like 50%. And you may already heard that there's a thumb rule: don't give up over 50% until you get Series A, B. So always you don't only need to think about the current round, but you also need to think about okay, when do I need the next round? How much money do I need for the next round? How can be my valuation, and how do I reach to a Series A where still having over 50% the controlling position of my company? And of course, at the early stage, you can play with some other solutions like these convertible notes and which can help you, like quasi loan instruments helps you with the valuation. We usually do that. If there's no agreement, then but there will be a valuation at a later stage for these instruments as well, but maybe not as of today. Okay, I went to the next slide. And I'm just repeating a couple of things, but there are investor return expectations. Investor they have an expectation because of their own investors, and as a thumb rule, usually they expect over like at least four or five times simple money multiple, let's say. But in many cases over 10 times multiple for the next year, for the holding period for the next 5 years. So it gives you an roughly calculation somewhere between like 25-30 plus yearly return. And just do the computation. If you need 1.5 million for 25%, then there's the underlying question for the investor. So let's say in 5 years, how I'm going to make this 4 times money on this investment. So what value I need? So what value the company needs to have as a company value after 5 years, and they run a calculation on the other way around, backwards. So this is also something they keep in mind when they do the valuations. So this is the other side of the valuation, and of course your side is based on your assumptions and your business plan and your growth plan. Also on the valuation, the pre-money and the post-money and the cap table, maybe you already have heard about these definitions. This is how you're going to make the valuation together with the VC. But again, valuation is not the only thing you need to agree on. This is just one element of the terms. And there are many other things you need to agree on in the term sheet. I'm not sure whether you already seen term sheets of investors. Maybe you can download like general term sheets, but it's good if you look into them and understand the main elements, the main terms. It's good to be just understand the concept. At the same time, you're going to receive a dedicated term sheet for your startup and for your investment round from the investor. So you're going to look into those special terms. But in general, the term sheet is basically just a general. It's a basics for the later stage documentation. It should have all the important conditions for your cooperation. I call it as an asymmetric structure because the VC will be in a minority position, will not have an operating role, so you will control the operation. And this is the reason the VC requests preferential rights. With the ultimate goal to be able to make an exit, maybe a very nice exit. Maybe they do 3-4 times money on the transaction. Maybe they are going to just get even or lose. But even if they don't make a huge amount of money on the startup, they still have, as you may remember, most of the cases, a certain period of time, and they need to exit from the startup. It's 7-10 years, could be 7-10 years, but they still they still need the tools, the terms to be able to make the exit. So that's why you know, if you see the term sheet for the first time, you will see, well, hey, this is not, it's not fair. There are so many extra rights for the investor, but this is the reason for it. Valuation is part of the term sheet, of course. The corporate governance, the voting rights, in what questions the investor has a voting right, but in most of the cases we are talking about like special situations. And if everything goes well, and in case the company is in case the management is running the company well, then the investor, most of the cases, remain passive with the operation. There's also an agreement on the exit proceeds, the so-called waterfall, how you're going to distribute the proceeds at the exit, where the investor can also have some, you know, preferential rights, getting the first money. At the same time, there can be a very nice balance with which usually the founders also happy with. And I said most of the cases we're talking about an indicative offer, an indicative term sheet with these 3 binding legs: the exclusivity, the non-disclosure, and covering your own transaction costs. Yeah. So going back, how you approach the investors, there can be different kind of channels. It can be, you know, your own individual approach to an investor through their website or an email. You can start with some very short materials, or if you're lucky enough and meet them in person these days and not only online, then you make your own pitch quickly, you know, at the buffet table or somewhere else. It doesn't matter. The most important thing is to use your couple minutes and raise interest. That's the goal. And of course there are different materials. I'm pretty sure you are familiar with what kind of materials you can have, and finally you get into a one-on-one meeting with an investor and talk about the terms and the details. This is usually the way how you get to a VC investment. So that was it in short, and I'm pretty sure we can talk about in details whatever is interesting to you, and whatever is you know, helps you to get further with the VC discussions.
Okay, great. I think it's...
So maybe a couple minutes more. Sorry for that.
Mm-hmm.
And there is one hand.
It's me. If you don't mind, I would like to ask a question about.
Absolutely.
Thanks so much, Janis, for sharing the useful information with us. You know, I got a lot of things. Even we had an experience with investors, but I got the new things here. I just want to know about the refunding. Is there any case about the refunding? For example, an investor want to get back the money they invested. Is that the case in investing? Doesn't matter in angel investors or venture. Is that case for them?
But how do you mean? Do they get back their money from the company?
Actually, it's, for example, we raise like $500,000. Then we are trying to get the investment for $1 million, and they are investing us $1 million. And after a while, they say, okay, you know, I want to get back this money. Or, of course, like I just want to know, is that possible or not?
Well, you know, everything is possible based on the agreement of the parties. Yeah. But usually, this is what I'm saying. Then it is, according to my terms, it is not a typical venture capital investor. It's not really a VC investor. It is more like, you know, a business angel can be like that. I see cases for that, but you know, in most of the cases, you don't make money at this early stage. So you're burning money. You're not making money. So sometimes it is difficult. You know, for business, as I said, as you can see, the funds are there for 7-10 years. There is no expectation from their investors, from the LPs, to pay the money back during the life cycle, but only at the end. They can reuse it. They can reinvest it in case it is written in their contract in their contract. But most of the cases they don't expect them to pay their money before the closure of the fund. So that's why they don't request you to pay the money back. If everything goes well, they want to keep their position in your startup. For business angels, it can be the case. You know, it's an individual. The difference between the entrepreneur and the business angel, according to my terms, is a business angel is someone, a private individual, investing into a startup according to VC terms. That's a business angel, and the business angel understands that 95 to 100% of the cases he gets back his money through an exit, and not dividends, and not, you know, some kind of repayments. It can happen that in the meantime, after even 6 months or 1 year, a strategic player comes and says, a bank in Azerbaijan, and says, hey, I want to buy your technology, so SmilePay, here's my offer. And then of course everybody gets back their own money, but it's an exit. If it can be also the case that only the business angel is bought out, but then it's also an exit proceed for the business angel if a later stage investor comes. Sometimes the cap table becomes goofy, becomes difficult, because business angel, you know, puts some extra money into the company because it is needed, then requires an extra 25%, and then the founders already in minority, then the cap table is a kind of tight. And then it can happen that next round the investor says, okay, I'm going to buy out some of the investors to clean the cap table up. But it's again exit. I call them kind of exit proceeds. It is not common that an investor gets his or her money back through the proceeds from the operation. But sometimes business angels, you know, as private individuals, get into, you know, a situation with their personal life, and then, you know, they say, please pay me out. I'm not able to keep up with the company, or I just lost my interest, so I need my money for something else. But usually they don't really have rights for that written. Did I answer your question?
Yes. Just one case over here. Even it's mentioned in the contract. Is this still the case, right? You said that they don't have this kind of right to get that.
Usually they don't have. What they can kind of play with when they provide. Okay, let's stick to a business angel. So the business angel invests 200K into your startup. And then usually it's you know, it's most of the cases it's only equity or equity also, but it can be a loan part. And if there is a loan, then the loan has maturity, and when the maturity is over, then you know, there's no guarantee that he's going to make the tenor longer. So, you know, after like 6 months, he says, please pay my money back. And then you can get into a difficult situation because the asset is illiquid, right? So it is very difficult if you're in the situation, the business angel wants his money back or her money back, then how can you help him to liquidate from the company? without any problem.
Yeah, got this. I understood that. Just you know why I'm asking that, because sometimes I'm seeing that some of the startups, they fail, and at that time they got the huge amount of investment. I'm just thinking about it. It's really interesting for me. How do they handle this issue? Because
Yeah.
they at that time might these investors ask them to get the refund.
Normally there's nothing behind the investment, so then it's sunk money for the investor. And that's why important to think about the portfolio they have. So that's why they have this, even if the expectation on the fund is, as you could see, like let's say 10%, but they have an expectation of 25% of your startup, and you may ask, hey, there's only like 10% expectation on your side, you're requesting, you're calculating 25%, because some of the startups will sink, and then there will be less successful. That's why this is what we call the portfolio approach. But this is why we call it venture capital. There is high risk, and normally you don't have to provide personal guarantees for the VC funds.
Yeah, exactly.
In most of the cases, you don't provide personal guarantees for the business angels as well. It's not common.
Exactly. Thanks so much for that. Thank you for answering that. Yeah, it's clear right now. It's clear.
Great. Should we have a little break?
Yeah, I think it's a great idea to have 10 minutes break at least, right? And then we can back to questions and answers and to Kahoot, right?
Yeah, put together Kahoot, and we get back by 15, right?
15, right.
14, at my time, 14. This is already 16, 15 for you guys, right?
I think so.
Okay.
Yeah.
All right.
Yeah.
See you later.
Yeah. Okay, I think we can continue. If there are any questions from you guys, I hope you're already back, already with us. No questions? No doubts?
I have a little question about our round A and C thing, if you have time for that. Can you hear me?
Sure. Yeah, I can hear you. Janos, you're on mute.
Don't hear us.
Still mute. Seems some technical issues.
Here it is.
Yeah, you're
Yeah,
back.
I'm here. I don't see you guys. Maybe it's need to see the gallery. Okay, here we go. Good. Do you want to shoot with the questions, or do you want to play a bit?
Yeah, Hassan from
I had a question.
Okay.
As I said earlier, we are at round A of investment, and you said we're pre-seed. So according to the amounts, perhaps we're in pre-seed, but according to our how do you call it?
Development?
Exactly. We are already, thank you. We are already on the market, we are working. So basically we're in round A because of our business model fit. So because we are working and we're trying to grow now. That's why I said we're at round A.
Mm-hmm.
And we got, sorry, I gave you wrong information. We got an investment that wasn't a venture capital fund or something. That was our partner that working with us that invested into our company. Also, I'm not going to talk about the numbers, but now, explaining if I'm wrong, are we still in the seed level or round A? So I think we're in round A.
It's it doesn't matter how we call it, to be honest. So between the seed round and the seed, and maybe you're absolutely right. And what I can say, it's even better. Like if it means that you were able to reach the market with a quite low investment number, which is great, I think, right? The question where you plan the next, what is the next level, what is the next market you're targeting, but going back, it doesn't matter if we call seed or if we go Series A. There are no real different terms between the, let's say, the two rounds. It is just some funds are specialized, providing or according to their plans, they provide smaller tickets, and they go back to their own portfolio approach. Usually there are like huge funds, but usually seed funds are smaller than growth funds or Series A funds. They don't call them Series A funds. They call themselves as growth funds, or later, not later stage, but funds investing into into growth stage. But they usually have the same terms, so it doesn't matter. You only need to go for the fund which provides you this amount of money, which you said $250K US dollars. If you go for a fund that usually provides 2-3 million US dollars, you need to convince them to make such a small investment for them, because what investor says, the bigger the better, but it's only within a range. The reason why is basically they know that they need to make to spend the money they have in these 5 years. They have, like, I don't know, 50 million US dollars. They have like 5 years. I'm simplifying it, but they have like 5 years to spend it. Let's say they would like to do like evenly spread work because they also have some families and other things to do. So let's say 10 million for a year, and they are happy with like the stage where they usually invest 2-3 million, let's say 2.5, would mean 4 transactions a year, right? So, and this is, you know, in a transaction, if it's only $500,000 US dollars or $2 million US dollars, doing the transaction requires approximately the same amount of resources. So if it's only a 500K transaction or a 2.5 million transaction, you do the same thing. You meet the team, you listen to the pitch, you start the analysis of the market or the product, you do your due diligence, technical, legal, financial, whatever is needed. And then you discuss the transaction, the term sheet with the founders. You hire a lawyer or use your own lawyer for the transaction. So the transaction costs do not differ that much. That's why they say, if I'm able to do a 2 million transaction and a 500,000 transaction, and I like both the companies, you know, I tend to, you know, put a little bit more energy into the bigger one, because then I'm able to spend the money. Maybe it's a kind of weird, but this is why they say the bigger the better. If they find a great company and they can, you know, invest a bigger amount, then it's a little bit more comfortable. But it's not like, you know, written rules. I'm just saying that this is the way of thinking. So it is, in one hand, it is great that you already, as you say, you define yourself as a company already shooting for Series A for a $500,000, $250,000 US dollars. You
Maybe
need
more.
to, maybe more, exactly. So then if you think the Series A, your target Series A, or number one target VC investor usually invests higher amounts, maybe you just need to think a bit, you know, how you can better use a bigger amount. But again, I'm not saying you should ask more than what you need, because as we looked at, your company is going to worth more at a later stage. So you shouldn't go for a lot more than what is needed. Of course, there's always good to have a cushion, because if you run out of cash, that's the worst. If you start to build your team and everything goes slower, as we expect, that's human nature. So clients usually come slower, revenue comes slower, and development takes longer usually. Maybe you are the best and you're able to do it in half time, but still you run into situations when it's slower. So it's always good to have a cushion, but, you know, not enough to really change your valuation numbers.
Thank you.
So what you can think, don't worry about a Series A investor or seed investor. One solution is you go for a investor who is happy to provide approximately this 250K, 350K, or, you know, something similar. And then they will be very happy with you, because you will be a quicker exit for them, because you're just in front of, I mean, you are quicker. You're going to go through the path in a quicker pace. So they will be happy with that.
Yeah, in terms of 5 years contract, yeah, of course we're gonna need more than the amount that I've just said. But where we're talking about 1 year, I thought that the investment will take for 1 year. You know, 5 years, yeah, it's 5 years.
Maybe, you know, maybe you can think about 2 years. You're saying, if I understood well, you're saying that this amount will be used up, let's say in a 1 year period, 12 months period.
Yep.
You know, the question, what is the next step after that first year? Maybe just growth, or maybe you again have a significant milestone you can reach. most, it depends on the VC fund. Some VC fund provides the money, they give you in a one lump sum. This is the money, you spend it according to your plan, but they will have the return expectations from day one. They provided the money. Some funds, and I like this approach, gives you a lower amount, and then they do follow-ons. Follow-ups or follow-ons, this is how they call. So for example, there's like a seed investor, let's say, happy to invest between 100K and 500K. It's easier for them to give 100K, and then let's see what the company is able to bring in even six months. If they bring the results in 6 months and it's not, then you do a follow-up. I like this approach, because the difficulty is when you invested, a quite significant amount comparing to your limits. You invested let's say your normal up limit is like 500K. You can go up to 1 million, but usually you don't give more for a startup as a fund above 500K. You give the 500K, and not everything goes well. So you're already, you're psychologically already provided this big amount of money. It is for you, you hold on to the company even if it doesn't go well, and usually you spend your majority of the time with the risk is for a fund to spend majority of its time, its management time, on the companies which don't go well, but they already invested money. It's better to just then provide 100K and let's see how the company performs, and just let it go. Then you have 100K sunk money, not 500K. So I like steps and I like milestones. I'm also coming from a financial education. Sorry for that. That's the case. We like brackets, we like definitions, we like milestones, because it's for us. We are not that much in depth in the technology and in the market, so we are just one step back. That's why it's better to have a gradual increase in the investments. That's my approach.
Great, thank you.
Okay, moving on. There are more questions apart from Hassan and Jamil.
Yeah. Do you want me to put up any of the slides? We can go back. I don't know which are. This is what you see. Okay, can I ask, and maybe we can also have a little discussion, but it's up to you. Do you have any questions? Then fire away right now. Okay, so my question, Jamil, this is how I pronounce your name, Jamil? Okay, so
yes, sir. Yes.
Can you please explain a bit your product?
Yeah, for sure. Thank you so much for asking, Yanis, about our product. Our product is SmilePay. The name is SmilePay. SmilePay is a solution to pay with your face. This is a biometric solution. When you are going to grocery stores and in stores, you can pay with your face with the biometric. It's a biometric payment solution. Why? Because right now people have a fatigue of carrying the phones, wallet, or something else. So it's been easier to pay without phone or wallet or without cash. You can pay with your face. That's all about our product.
Yeah. And how far did you get with the development? So what do you have as of today?
As of today, we have right now in Azerbaijan there are 5 big stores. The big stores. We have the chain of stores. We have in the 5 of them, and they have a great interest in it. And also the competitor of this store, another store, asked us to just integrate our devices into their stores too. So 5 big stores with up to 30 devices in express cashiers, and that's all about. It's not MVP, it's a beta level, and right now we have up to 100 users. Their database, they're using the database for payment, and that's all about.
But it's more for testing, or it's already live?
It's live.
Okay. All right. I'm going to look into that. You know, face recognition has many questions, and you know, regulations and rules, and also some difficulties in the past. You know, it's different from country to country, and also the users approach is also different because of the personal data. There's a certainly serious issue, but I'm going to look at it myself. To your pitch, I'm interested.
Thank you, Yanis. You know, I would like to tell two things here. Right now, it's live, but it's at some time in the testing process, because we are just always paying attention to our devices, to our solution, for if there's any kind of issues behind that, because it's the first time we're doing it, and also it's not only our country, and also globally, we can say the first thing, because it's already used in South Korea and in China. I used to live in China. I know this kind of solution. But for other countries, and also for our country, it's a new thing. So that's why we are just trying to build a new culture for the people. They have tons of questions, tons of concerns about this solution. But I can say that, proudly can say that, we are not storing any data about the customers. We're just getting their the facial. There's a 2,500 focal points in the face, and we're taking this data and converting it to the dots, spatial dots, not the face, not the image, not the video, just the spatial dots to vector image, and then store it into our countries, the banks. Bank collects this data, and when we are giving this data spatial ID. If this ID the same with the face of this person, then the payments go on. If not, it stops. So that's why in the security and privacy side, we are really, you know, we are really, how to say that, we are just, I cannot find the word. We don't have any kind of concern about that for privacy, for security, because we already found
customers surely have, right? But it means that it has some kind of encryption, right? Does it mean it is?
Yes.
So it's not getting directly to your some kind of, you know, very private data of your features, of your face, but then you have some kind of encryption, if I understood it well.
Yes, exactly, Honest. You know, it's encrypted, the version of the face. You know why? Because it might be interesting for the companies, or even for us, to collect the face of the people or something like this, but it's not. You know why? Because pictures, photos, and videos, it takes a lot of space to store, right? So in this case, it doesn't work for us. It might seem that we are this side, but we're gonna lose. It's gonna cost us a lot to store this data. So that's why we just encrypt it to vector image.
To simplify it.
That's all about
it.
Exactly.
What is your fundraising stage? So what amount you're looking for, if you're looking for currently, and what kind of investor? I'm just asking.
Actually, we are open to discussion. We cannot say exactly this amount of money. We can say it for another startup, because we know where we go. But SmilePay, we can say this first stage. We just have a few devices and a few users, something like that. So we are open to discussion, special discussion for that. We're just waiting for that. If someone has this kind of interest, we're open to the discussion. We can discuss together, and let's see what comes next.
You know, it's usually the other way around. So you need to tell the number. You need to tell, what, because a VC does not really want to discuss it with you. You need to come with the menu and says, in the next 6 months, I'm funded until whatever, for the next 6 months. So I'm looking for money from, you know, from January to whatever the next 24 months. This amount I need. This is my business plan. This is I can kind of put together as a business plan and financial let's say return or whatever this plan. And then this is how you usually approach. If you wait, you know, for a discussion on the VC side, the VC side says, please tell me how much money you need, and you know, what is your plan for the next 24 months. Usually this is how it works. So it's, you know, it's better for you, if I can suggest, to put it together, and one, you know, until you fund it, you're fine. But start the fundraising before you need the money.
Yeah, thanks, Jonas. Actually, I mean, to open the discussion, we have some kind of you know, goals for the investment, but we actually, I'm saying that, for example, for wealth, we have a strict numbers, this, that, but for SmilePay, we also have this kind of numbers, but we are open to discuss, we can open to adjust that. If so, I mean that. Thank you so much for your support. Actually, if you have interest in it, we can talk this privately and discuss something on it if you wish.
All right. Okay. Yeah. Thank you.
By the way, I thank you. I just sent the request on the LinkedIn to you for just connecting.
Okay. Absolutely. Thank you. So Hassan, ePoint. So you're raised from kind of a business angel so far, and you're raising this approximately 250K. This is the plan, right?
Yeah, for the first year, as I said, yeah. I'm not sure that do you read about our startup, what we do?
No. So that would be my next question. So what is the solution and the product, and what development stage the product and is?
Okay. We're an online payment solution.
Online? Say it again.
Online payment solution.
Online payment.
Payment aggregator. So basically what we do, we give an opportunity to SMEs, small, medium enterprises, to start accepting online payments via their applications, websites, whatever, within 3 minutes. So normally in our local market, we are the same but better as a PayPal or Stripe. That's the same system. Not the same, but better. We're already on the market, working since November last year. Development started in June last year. Official launch was November. As of today, we have already 150 customers. 65% of them are active. And our not the revenue, but the turnover is about, as of today, is $2.6 million. It's the turnover.
2.6 million. What is the currency?
Dollars.
$2.6
USD. Yeah. Also in manats, it's 4.5 million in our local currency. What we do is we also provide small business page for our SMEs who do not have an opportunity or technical knowledge to create their website or whatever, to accept payments. For example, it's a very popular Instagram sales here. Also, Instagram here is used as a marketplace. And so basically we give a link to our business page with a ready solution, and we have funds transfer 24/7 on any card. We don't. There's no mandatory bank connection. We can we can transfer funds on any credit or debit card. Official partners, Visa payment system is our official partner, as well as BDO. It's the top 5 audit companies. And our biggest client here in local market is, I'm not sure that you know them, it's iTicket. That's the biggest ticket sales, event ticket sales in the region. They're also operating in CIS countries. What else? In Turkey, they've started working as a what we want to scale, and basically our next stage is to onboard international customers, SMEs. yeah, from Poland, Brazil, whatever, and that's our key features are fast, convenient registration. There is no need to wait for 2 weeks, no contracts, everything made online, and we also do cross extra services for SMEs. As if payment went through our platform, we give automated delivery opportunity that's outsourced from the other company here on the local market, and social media marketing services. Basically, we want to do a hub for SMEs to solve all their problems in one place. Yep. And one more thing, we are I'm not sure if you know, Jamil's company also participated in SmilePay. We are the second place winners of Takeoff Startup Summit in Baku. Yeah, we won. Thank you.
Congratulations.
We won 10,000K, and we just received them yesterday.
Oh,
so,
great.
Yeah, it will be a great Friday.
So let's celebrate it.
Yeah, we are going to.
Congratulations.
Thank you.
All right, I'm going to look into your pitch deck as well, and if anything comes up I can help with, I will do that for sure.
Thank you.
Yeah, apart from Jamil Hassan, sorry, we have also on this chat, on this meeting, some prospective promising startups. For example, Emin from Murmur. Maybe someone from Helptich, to run from Helptich. Maybe Ramil from Dr. Agro. Feel free, guys, to raise your hand, to mute yourself and ask questions, present your startup. I'm for sure that you already have raised some funds. Do not be shy to share this information to our expert. Guys.
If not now, you can do it later on. You can reach at my email, and maybe if you wish, we can do a little play. It will be just for fun on Kahoot. Oh, then maybe there's a question.
Hello.
Hi,
Hello.
Rami.
Hi, it's me, Ramil from Dr. Agro. So we are online consulting service. We are providing online consulting service for farmers. We are just new in the market. We raised almost 50K, but it's kind of family money, not outside. We are looking forward to go to nearby countries, Turkey, East Asia, and Europe as well. But right now we are working on local market. I have a question about the investment part. For example, can we find investment in for example, in Turkey, but give the share on the operation in the Turkey market, not the Azerbaijan market? Can we separate? I mean, our investment in based on the different countries?
Usually not. So, the question, if I understood well, sorry, there is a big rain over here, so that's why maybe I'm a little bit loud, but I think it's like huge ice falling from the sky, and I have this roof window, so it has the noise. Sorry about that. But you have a pretty nice weather over there, I see.
Yeah, it's sunny. Actually, it's warm.
Always.
This morning it was, but now it's ice. So first of all, if you provide service, if I understood well, and if you're advisory, then it's a little bit more difficult to get VC funding. Most of the cases, if you have a product or if you have, a service.
Actually, it's application. It's
an application. Okay, all right.
Based on app, yeah.
Based on an app. Okay, and what does the app do?
The farmers registered in the application. They get the online consulting service. They type what kind of crop they are planting, and some things automatically appears in their profile. They get the information based on what kind of plant they are wanting to plant.
See. Okay. I'm going to look into your profile as well.
Thank you.
Answering to your questions, I'm not an expert in Turkey, but I don't really think that differs so much from the market here.
I'm sorry, actually not exactly in Turkey, in other countries, maybe in Europe as well.
In other countries. So usually investors like to invest into the company where you have the IP, and you know, the more market you're able to go, they are more happy with. So usually it does not really work that you have an investor for the Azerbaijan company and then you have a different company in Turkey, or a part of the or a different company that provides service in Turkey. They usually invest into the one and only company where you have your IP, when you have your team, and when you have your revenues. If you separate it into more companies, that's not really the playground for a VC investor. It can be you know, some other kind of investor. It can be a business angel. If you have a specialized operation for one particular market, but it's usually not the case for VC investors.
I got it. Thank you.
Welcome.
Okay, I still can't see more questions. It will be like relevant to switch to Kahoot?
Yeah.
Oh, yeah.
I can. It will be like 5 minutes, and it's more for fun. Let me just try to. Maybe I can only go this way. Do you see my screen?
Yes, I do.
For Kahoot, do you see the game pin?
I do. Guys.
So if you have Kahoot downloaded, then please just it can be on your mobile or it can be on the computer. If you go to kahoot.it, it should work.
Kahoot.it.
Kahoot.it.
Let me check.
That's the number 1264639. And I'm waiting for players. And I think the way it works, you will see the questions on the screen here, which I just shared, and you are able to, okay, we have Hassan, great. So you will see the questions on my screen. Maybe I didn't do the best way, and you will choose the answer on your mobile or screen. I have 3. Now we have 4.
Hi.
Well, we have more people to play than ask, but that's fine. Here we go.
Okay.
Entertainment is always on the top.
Yeah. So I don't see Sophia.
Oh, should I join?
Absolutely.
Okay.
Without you playing, that just doesn't make sense, Sophia. You know, just waiting for you.
Great. I'm entering.
When Sophia joins, then we can start.
Yeah, I mean.
Oh, here we go. Okay, let's see if it works. Okay, so VC Lingo. So you will see the questions on my screen, I hope, and then you can choose. So what is a PIPCAC? There are 3 answers here, and I think you only need to push the right color and shape on your mobile or screen. Okay. Yeah. Hurry up. We have 4 answers. A term indicating that customers are stupid. That was the right answer. I didn't know it, to be honest. Okay, can we go to the next one?
Yes.
All right. Okay, nobody got it right. I didn't do it either, so. No, maybe. Sorry.
So sorry.
Sorry. Questions are not seen.
Yes,
Yeah.
the questions are on my screen.
Only?
Yes, only on my screen. Maybe I didn't do the Kahoot the best way. Sorry, for next time I will do it.
Yes, sir. On the Teams there is the delay.
Yeah.
Not on our browser. In the
Sorry.
Teams, in the meeting, the screen has a delay.
I see. So you have less time. Sorry for that. Less time to answer. Maybe next time I will. So I think we have like 3 good answers and only 5 answers. Okay, I'm going to send you the questions anyway. So the next one. So what is a customer success associate? I hope you see the answers. It's almost like a happiness hero, right? Okay, if I put next, then you will see the scoreboard. Okay, Jamil took the first position. Can we go further?
Yes.
Okay. Third question. DevOps. What is a DevOps? Very good answers. Pick the good one. Not so difficult, right? I think you already done that. And I think everybody got it right. Almost.
Fitness program sounds good.
Exactly. Okay. Very nice scoreboard. Everybody's coming up, but Jamil is still in the first position. Okay, next one. We have 10. Who is a programmer? Founder's brother? Software developer who acts like a frat boy? An app that teaches children to code? And we get all the answers. No, 7. Yeah. Okay. Here's the good answer. Okay, let's see. Someone took. I don't know how the scoring is made. Sorry for that. But
I think it depends how fast you're answering to the
I think you get more. You get more if you're quicker. Yes. So the next one, and this is already the 5th question. What we call a puffer fish? Very nice word. Maybe not enough time for reading it, but this is you shouldn't do what some startups do. So the practice of making a startup seem larger than it is through subterfuge. Okay, let's see the results. Here it is. Okay, did this first. Well, actually your points are pretty close to each other, but still we have some time to. What is a subprime unicorn? Yeah, I'm not reading the answers because it's easier for you to read. Okay, so a company formerly valued at more than $1 billion now fallen on hard times. That happens. Okay, let's see the results. Hassan is taking the role. But Sophia is coming up.
Yeah.
Very nice. Right. Let's see the next one. 7th. What is the stack? It will be a quick one. I really like the yellow one. Okay, I think you do it right. I'm pretty sure. Maybe someone just pushed the wrong button. Okay. Here's the score. There is a big competition here, I see. Okay. Only 3 questions actually. What is an MVP? It will be a quick one. You should know it, but if you don't, you will learn it. Okay, everybody knew it. I'm happy. Okay.
Oh, I am on fire.
Yes, absolutely. Okay, the last 2 hockey stick. What do we call a hockey stick? Well, only 3 good answers, but basically this hockey stick shape shows that the company like at least for making using money or using investments, it goes under and then it goes up, but they use this hockey stick for many things. Okay, so Jamil is again on the top, but you're doing all really well. Okay, so the last one, which is blue skying, which is here because it's not ice anymore here. This is what you need to do with investors for sure. I'm happy a bit. Okay, here we go. Let's see. Here's the winner. Jamil, second. No, third, sorry. It started with the third and the first is Hassan. Okay, here we go.
Yeah.
Congratulations, great guys.
Congratulations, congratulations.
Thank you. What do I get as a prize?
Yeah, that's cool.
So that was a little play. All right, so thank you very much for participation. I don't want to hold you up. Sophia, I give back the floor to you, and you can find my email. I put it back, but Sophia, please share, and you also, if you guys want, Sophia can share the presentation with you. I just sent you, Sophia, the last one. It also contains some slides about the one-pager, the teaser at the end, which we didn't talk about. You can also look into that, and let me just give back my email. Yeah, Janos@smartupsventure.com.
Great. Thank you, Janos, for today's presentation and for beautiful materials for startups. I would love to say that during this week, I mean, in a few days, I will be able to send you all Bootcamp's materials along with emails and LinkedIn profile of our workshop speaker. Also, you will get the homework from each workshop speaker. It means from 4. You will have like a 4 homework, but you will have to choose just one to do. In this case, you will have just 10 days to send me back. And during the demo day, after the pitch session, you will have a breakout rooms with each jury members, with each workshop speaker, who will give you a feedback from your homework. So it's a great opportunity to prepare it in advance, to prepare all questions, and our jury members and workshop speaker will give you feedback about your homework assignment.
Actually, I did a homework assignment. I almost forgot.
Ah, yeah, you didn't explain it, right?
Yes. So yeah, you're going to send it to the teams, right?
Yeah, absolutely. I'm going to send all homeworks from all workshops to each startup.
Okay.
You will have to choose just one to do out of 4, sorry, out of 4.
Okay, great.
Okay, if there are no questions, no doubts, I just would love to say have a nice day and thank you for being with us today.
Thank you very much.
Thank you and good luck for all in the
Thanks a
fundraising.
lot.
Thank you.
Thank you.
Thank you. Have a great day.
Thank you.
Thank you very much.
Take care.
Goodbye.
Bye.
See you next.
Bye.